We had a problem, I know, last week where the audio did become a little bit distorted, but hopefully you can hear us and we can fix that as we go along. So welcome, everyone. Thanks for your time. Today is all about live analysis. So it's all about you guys, what you want to have a look at. Please let me know. We'll stick it in the box. We'll have a quick look through the calendar for the rest of the week and next week. Obviously, it's the new start of a new month, and therefore things can become a little bit volatile, a little bit interesting. So we'll have a look at that, everything. So Eric Joseph is saying everything is okay. You can still hear me okay. So please, Joseph, Simon, Samuel, Liesel, anybody else that's out there, Lanky, on GoToWebinar, do let me know if it deteriorates as we connect to YouTube and Facebook as well. We did have some problems last week and the week before, but thank you for being here. And I say it's all about you guys today. So let's get going. As we say, trading is a risky business, especially trading CFD. So please be aware and understand the risk involved. I'm not going to read that out. I'm just going to leave it on the screen there for a couple of seconds for you all to get connected. Hema, good afternoon to you too. Hopefully you can hear me loud and clear. And let's get going. Gold. I don't know if you trade it intraday, Emma. Emma on YouTube has asked about gold. Big down move yesterday, and then all of a sudden, about 3 o'clock, huge turnaround. We moved $20, $30, $35 at one point. But the higher time frame trend, Emma, still looks a bit weak. But we'll have a look at it intraday as well for you as we get going. So let's just run through this. There's my ugly mug. Usual questions from US 30 and S&P 500. We'll have a look at that as well. Trading really is a mindset business, guys, and that's really what you've got to control. It's not listening to old guys like me or young guys like me or ladies like me. Just because I've been around a long time doesn't make me a good trader or a good analyst. You get a lot of experience, certainly, but you've got to principally, first and foremost, to understand yourself, and that's what good traders will always agree with. I'm sure it's all about the psychology. It's all about mindset. It's not about lines and charts and patterns and all the rest of it. It really is about understanding yourself and accepting that you lose a lot in this business and getting your head around that you can accept losing and accept winning equally as well. So we'll have a look at this week and next week from a economic diary point of view, the high impact events, and then we'll look at the assets that you want to have a look at. The only one we've got at the moment is the Dow and the S&P 500. So you guys over on GoToWebinar, stick some questions in the box if you want to have a look at some particular assets. John's asking about the yen, across the yen pairs. Guru's also asking about yen pairs. So let's get going. Let me just quickly run through the high impact of events for the rest of this week and next week. It's a PMI week this week. What is PMI? PMI stands for the Purchasing Managers Index. It's produced in each and every developed and developing market, and it's split into two. It's split into the manufacturing sector and the services sector. The services sector, that part of the economy that doesn't actually produce stuff. Manufacturing, car factories, people that produce pens and pencils and computers and anything else that's made, suits and ties. Anything that's manufactured, anything that's created sits into the manufacturing. The other side of it is the services sector. And so that's people like lawyers and accountants, people that provide a service, consultants, doctors, architects, all that sort of thing. So that's the services sector. So that's a very brief good afternoon, George, my friends. And welcome to LinkedIn. We don't get many people from LinkedIn, George, and certainly don't get many, hopefully, don't get many people from downtown Limassol on LinkedIn as well. But I am telling them, my friend, anything you want to look at, any charts you want to look at, moving averages, MACDs, George, we're here to help, my friend. What was I saying? Before George put me off my stride. Yeah, PMIs, Purchasing Managers Index. And the big news this morning is the big jump we've had in manufacturing in China in particular. It's a 10-year high, the January to February number. Leapt up. It doesn't look a big jump, but it's back into this positive region. Remember the PMI numbers. Anything over 50 is a positive. The sector's in expansion rather than contraction. So through the pandemic, the impact of the atrocious war in Ukraine has had a big impact on manufacturing as well as obviously services sectors of many countries, and therefore a lot of them have been in contraction. But we've had this big reopening of China, and we've had a big surge in manufacturing between January and February, and that's a big positive. That's led the sentiment this morning in Asia, and that's fed through into European markets this morning. Throughout the day, we've got inflation data coming out the German territories as well, the German federal states. So watch that. 9% for Germany is expected as a consensus number. Watch the number later on. Tomorrow, the euro area inflation number 5.3% is expected as the core number. That's the key number. The central bankers are looking at the headline numbers, which is what the papers and the press get hold of, but really it's the core numbers that the central bankers are really looking at. 8.2% for the headline, down from 8.6%. And then the final key data point of the week is the services sector of the United States, the ISM, the Institute of Service Managers in the US. Their service PMI number for February expected to slip from 55.2 in January to 54.5. So that a slowed potential. The rise in US is grinding. There's lots of chatter about higher for longer with regard to interest rates. The Bank of America yesterday on Monday, issued a note saying they can see US central rates getting as high as close to 6%. They are the most hawkish of all the Wall Street banks, but the 5.25% of a percent to 5.5% now is the range where most of the participants are expecting to get the terminal rate, as they call it, to get to before we Joseph's asking for you. Yeah, I'll put it in here. Joseph, let me just. No. I'm not going to go to that. I'll do that for you, Joseph. Yes, the YouTube link is what I'll do. So what was I saying? Yeah, so big announcement from the Bank of America about terminal rates getting much higher. So and as we've been saying for a while, inflation again, in my experience, does tend to stick around. It can be quite sticky, and many people have been saying that, and that's perhaps proven to be the case. And again, yesterday we had a surprise out of Spain and France. Their inflation rates had ticked a bit higher than anticipated, so showing that it is hanging around, and the ECB are going to, follow along with the Bank of England, Bank of Canada, Aussie, Kiwi, all moving interest rates higher. Only the Bank of Japan continuing to hang on to this loose policy. Next week, although the first Friday of the month is this week on the 3rd. It's not a non-farm payroll Friday. That's next Friday the 10th. But next week starts with retail sales and GDP numbers, and then the decision from the Bank of Canada. They were the first to sort of indicate that they'd reached their plateau, their 4.5%. So see what they've got to say on Wednesday next week. GDP from overnight from Japan. It'll be interesting with the new incoming Bank of Japan leader on the 8th of April, Mr. Crude, and then the non-farm payroll data. There's interesting consensus of decline. Interesting when that's been produced. So see what non-farm payroll looks like on the 10th on the Friday, and overnight we've got the Bank of Japan. I say Bank of Japan announcement the last time. Mr. Kuroda presides over that announcement, and his final meeting's on the end of March. So plenty to come in the next week or so. Let's get to your question, Joseph. Let me just find the link. HFM on my YouTube. Go to our YouTube. If you go to our page, Joseph, but let me just find it for you. And just bear with me a second, everybody. I'll be with you in a minute. YouTube. And there we are. It's that one there. So if you want to share uh, that with so if you want to join us on that, the link on YouTube, everyone. If you want to join us on YouTube, if I haven't got the LinkedIn link, I'm afraid, Joseph, but I hope that's okay. Right, let's get going. Let's just run through charts for you. So charts, and let's go back there. And let's go back to first request. First in was, let me have a look. We go back here. First in was Emma about gold. So, say gold had a huge turnaround yesterday. Where's my gold chart? Gold charts here. So huge. This is the hourly chart. You can see we had this big move down to break the key, this 1805 area. We posted as low as 1806 on Monday, and we went below that to 1804.56 yesterday. So that looked like continuing. I'll zoom this up a bit. Zoom this. It looked like that was a continuing leg lower, didn't it? As we were zigzagging lower, big down from Monday's high up here at 1819. We went all the way down to 1804. And at this point here, it looked like we were continuing to move down, did we? And indeed, we did for a few hours. And then a big turnaround here on the 3 o'clock, 4 o'clock candle, just before the US Open yesterday. And then we had the weak US data that pulled the dollar down, and then we had a big old rally all the way to the 200-hour moving average around the 1830 level. But also remember, yesterday was the end of the month. There was lots of end of month balancing on books and accounts. So if we look at the daily time frame for gold, it had an horrendous. Sorry, hang on a minute. Sorry, had a very strong January, but had a horrendous February. So we topped here 1960. We were at the beginning of February, and then we just declined all month. Unwound these two big candles here. Sorry about all the lines, but they're hourly lines, aren't these? Are daily candles. So two big, huge down days there at the beginning of February, sorry, and then we just continue to decline all the way down. Now we've seen what we've seen in the last couple of days really is profit taking on this big trend down. So it still remains very weak gold on the higher time frames. The 20-day moving average sits there at 1847.55. So although we've had 3 positive days so far, and we're up again today 1835. It's still relatively weak in the whole scheme of things, but we've had this big rally here from these lows in November, where we were down 1650 and 1550. So big rise up. Sorry, it was Emma was asking about gold, wasn't it? Not mine. So this is gold on the daily. If we come down to the 1 hour time frame, you can see this is that chopping, that zigzagging down that we went last week. Again on Monday we were down, and then we reversed very aggressively yesterday into the 200-hour moving average, which is now our support going forward today. So 1830 is our key support. As we move forward, the 20-hour is there at 1828, and the 50-hour is there at 1820. So if we zoom in again, we can see we're poking highs. We've got today we've made a 10, 25 hour time apart, 1, 2, 3, 4, 5 day high. Next resistance comes through. I've got a line here at 1843. Don't know why, but it's there. It's usually there for a reason. It takes us all the way back to the 17th here. So 1835 at the moment, 1843, and then the high, these highs you can see here, we look to the left, the intraday highs took us to 1845, and then above that was this high there for for February, from February the 20th at 1847.39. So they still seem a bit of a way away, although there's lots of fresh air up here now, so we're moving higher. So far today on a daily basis. You can see the signal line here on the MACD has sort of cooled off a wee bit, flattened out. The RSI here, it's 7 set up here on the RSI, so it's been into its oversold area, cooled down a wee bit, but it's sort of consolidating around at 1835. So it's got 1830 support, 1835, we're consolidating at the moment, and then 1840, 1843 targets to the upside if this is going to keep going. But we have had a very strong bounce from the last day of trading into the first day of trading so far this month. Hillary, that was gold for you. You're asking about dollar and then pound, then stocks if you can. That is NASDAQ and S&P. All right, Hillary, let's go through these for you. So dollar yen. Guru was asking about dollar yen as well. So dollar yen here on a this is black charts using white charts. Again, do you guys want black backgrounds or white background? You happy with the black background? I'll leave it. If you want the white background, let me know. But I've been using white backgrounds recently on live analysis, but I'm using my default black at the moment. So dollar yen, again, looking at the higher time frame. The higher time frame, a bit messy, sorry. These are the hourly charts. So again, it's in a very strong uptrend. The 20-day moving average here at 134. So 134 for dollar yen trade is that big support area. The resistance we've got is now 136.50 to the upside. So quite a big spread for dollar yen. And there's that 136.70 which we got to yesterday. There's that 136.50 area which was our initial resistance, and we poked higher again yesterday. Again, end of the month. Couldn't quite get to 137 itself. Today we moved lower. Significant candle here at 8 o'clock server time, 9 o'clock. Big down candle here from a gentle rise during the Asian session, rejecting 136.50 a week at yen today. So triggered lower there, and it's continued to move. And here we are moving into the next support zone and round number, which is 135.50, and that looks, as it went up nice and steadily, it could come down fairly steadily. But next current support on this hourly time frame is the 135.50 area. Moving averages declining quite nicely. MACD from that sideways action from the non-action this morning, we started to move lower. Signal line is under the zero line. You can't just see that because my head's in the way. You can just see that on there. But take my word for it. You can see the MACD. Yeah, you can't see the RSI. The RSI's moved into an overbought situation. It's 28. Hopefully you can see that. So that's continued to. So that trend is down. The 30-minute is also down. Obviously, the 15-minute is still down. So again, depending on your time frames, just hang on to that trend because that is moving lower here. Let's say 4-hour. Oops. So the 4-hour time frame, again, there's a bit of consolidation here, like we saw on the daily. So the 136.70 zone here for the last few days of February has been breached, and we're down here now at the 135. You see on the 4-hour time frame, next key level is 50 points lower at 134.50. So that's triggered lower this morning here. When in fact it's triggered lower at retrace, but you're still stopped up there, and it's gone back down again. So that's still moving lower. The 4-hour time frame moving lower. Dollar yen, that is Hillary. Again, I don't know time frames. Put in the time frames that you're trading in, but that's certainly lower than I say intraday and daily. Also, oops, dollar yen daily. Dollar yen daily still in an uptrend. Dollar still bidding against it's rolling over so far today, but still very, very much strong uptrend for dollar yen. Next one, Hillary, was pound cable. Cable here. Cable had a strong day yesterday on the announcement that Rishi Sunak has done a deal with the EU. So there's a new EU Northern Ireland Protocol, which has been very, very sticky for businesses and citizens of Northern Ireland because their devolved parliament hasn't been sitting for many, many, many months. And he's saying to the staunchest critics of or favourers of Brexit in Northern Ireland, even though 60% of Northern Ireland voted to stay in the EU, the dominant party, the DUP, um, has been very, very sticky about the Northern Ireland Protocol and has been renegotiating. He's not taken them with him. So see how all that pans out politically. But as far as the stock market's concerned and the sterling's concerned, sterling's been very much the opinion is it's been undervalued for many months, if not years. But so we had a big, strong sentiment rally yesterday in sterling. So we went from 119.26. Admittedly, dollar was a bit weaker as well yesterday, but it was that perfect combination. So we had a big old trend follow rally all the way through 120 and 121, all the way to 121.40 zone. Couldn't quite get to 121.50 before it cooled and the 120 zone, the key 120 zone, was retested yet again, and so it remains relatively volatile on a intraday basis. Couldn't get to 121 today, and we're down again now. So rally up, rally, retrace, rally, move down, lower low here from yesterday, and we're testing back down here. So 120 in the higher time frame becomes a very, very significant level and a key support level today. Today, resistance is at that 120.67 from that high we'd had on Monday, then 121, and then yesterday's high, which came in at, let's put that in, just shy of last week's high, or around about last week's high, 121.40, which corresponds to the high there from the 21st. So biased, well, it's chopping about today. We've been up this morning and earlier trades couldn't get to 120, then it's rolled over. So the support really, you'd have to really intraday, Hillary, and who else was asking about? Sorry, I can't find him. I think it was Samuel. I think it was Samuel. There's this 120 level. Yeah, it's very choppy. Be careful. So there's a big range there, 121 to 120, and it's sitting at the bottom end of that 121. The actual low today didn't have to obviously get us to 120. So really, you want to be watching that level 121.15. So 120.15 is the low of the day. The current high of the day is shy of that 121 at 120.90. So there's a 75 pip range we're in today. It's inside yesterday's big move. So let's see how that breaks out. So they're the levels to the top and the bottom you want to be looking at the moment. But bias to the low, we're at 120.26 and heading perhaps into the 2015 again. There's no particular data out of the US, out of the UK to move that. Today, I'm saying that, and PMIs. We had the housing data earlier than we are at the UK. It's really probably waiting on Euro PMIs and bond PMIs are out. The Bailey speech doesn't move things particularly up and down. Really, it's the ISM data out of the US later on today. Okay, so stocks. I'll get to the stocks, Hillary. Ahmed's actually coming to analysis on euro dollar. Of course, we can. So euro dollar continues to hold the 106 level, having declined last week from 107 and beyond 107. We got as low as 105.30 here on Monday. We rallied yesterday a wee bit into the 200-hour moving average, couldn't hold that, and then declined into close of the month. So again, looking at the monthly action for euro dollar, right here, we declined most of the month. So the dollar came back from euro dollar was up for January, down for February, back to where we started, a bit like the dollar index. So 105.30. You see, that's the brown line here is that 200 day moving average. That's the support. 105.30 is the big support for euro dollar going forward. That breaches lots of, again, a lot of fresh air below that. Still biased to the downside here on the end of day basis. There's the 20 day moving average, which sits at 106.75. We can't get over that. We haven't been over that since the beginning of February. But a strong up day to start the new month, see what happens. Obviously, we got decisions out of the Fed and the ECB this month. ECB already said they're moving by 50 basis points, so that's all priced in because everybody knows about that. But so we're still biased to the downside, although we've got a big, strong up day currently today. So intraday, the 4 hour has ticked high from that low at 105.30 uh, last week, and um, yesterday was here 105.16, bounced off that. So that's turned up 106.60, and then the next resistance is 106.90 there, where that 200 period moving average is for the 4 hour traders before we get to the key 107 level. 1 hour traders, um, again, very a choppy day yesterday, up and down, but a stronger day today, breaking over its 20-hour moving average. But moving average is flat there at 5 till 6, but certainly a big breakthrough there. We went back over 106 on the 8 o'clock candle, and we've rallied ever since through the resistance we had yesterday, the 200 hour. That didn't hang around today, so up, 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 and 106. 70 is where our resistance has come into play, and that's our high for the day at the moment. So that's still trending higher. Euro trending to the upside. Ahmed, I hope that's answered your questions. Use high time frames. That is 4 hour, 1 day, 1 week, 1 month. Certainly, Henry, I'll look at those for you as well. As I say, the trends remain set. The dollar, having had a weak January. Let's just look at the cable one here. So having had a week, you talk about the daily, having had a week January, so cable rallied up here to 124. We've then reversed all of that for February. So we're sort of up and down. So really sort of, you can argue, sort of range bound. Although the low of January hasn't been achieved at 118 low for January. Wasn't achieved in February. So the low of February was higher than the low of January. Not we can read too much into that at the moment, but certainly we can't get over the 125. 125 is a big psychological round number for cable, Hillary, and we can't get over 124. It's been high for the December rally from the hiatus of quasi-quarter budget. We went to 104. But we can't get over that 124, 124.50, not even 124, not into 125. So 124 is a big line. Again, if you look at the weekly time frame, you can see this is the hiatus of the Trust government when we went all the way down to 104. We recovered quite nicely, but we're still sort of now oscillating between the psychological, the key 120 level, and we can't get over one, as I say, 124. And the next big round number is obviously 125. So 124 is resistance, 120 is support. That's the weekly range that cable is in. And you even asked about the monthly. So if you look at the monthly, there's that range again from the downtrend of 2022, the hiatus that took us all the way down here, chaos of the Truss prime ministership, and then we've recovered for the last 3 or 4 months, but still. So 120 is the floor, 124 is the roof for cable. Okay, hope that's answered your question, my friend. Let's go back to YouTube. Online was asking about more pairs. Let me just bring up some more yen pairs. We looked at the dollar yen. You can see if we look at windows. So these are the main different setups here, Guru, my friend. But you can see this is Aussie, Pound, CAD, Euro, Swissy. There's a Euro setup. We're in Euro, don't we? Let's just minimize that one. And this is the daily. These are all daily time frames. So you can see here, dollar yen is up, so the yen is weaker. Euro yen is up, so the yen is weaker. Aussie yen is sort of now going down, so the Aussie is weaker than the yen. Swiss yen is to the upside. CAD yen is to the upside here on the daily time frames, and pound yen is to the upside. So the yen is the weakest of all of these crosses, as you might expect. Remember, we've got this loose accommodative policy in place by Mr. Kuroda, supported by the Japanese government, and it looks like Mr. Ueda, the Professor Ueda, is going to, what he said so far is there are their policy is appropriate. It may change when he's actually got his feet under the desks. Who knows? But at the moment, the yen is relatively weak against most of its peers, and you can see here there's a nice, 20. When was that from? That's a daily one. Yeah, so it's all trending nicely. The only one, the Aussie, is a bit flat. CAD also a wee bit flat, but still the others are trending positive. Euros, euro yen is up. Had a big strong day yesterday. Pound yen is up. Dollar yen is up. Aussie yen is down here, as you can see. So yeah, yen in focus, certainly in focus during March. It's a key month. It's the end of the financial year in many countries, and end of March marks the end of the Japanese financial year. As Ueda will take over, and the policy change doesn't look like it's coming anytime soon. George David, good afternoon. What a fine, fine photograph that is from LinkedIn. Anything you want to have a look at, my friend? Any charts you want to have a look at? Let me know. Samuel, hello. Abinar is asking, how do I get a video of this analysis? Abinar, the recording will be available to you on GoToWebinar. So you'll get an email from our marketing guys at the end. The recording will be uploaded to our past webinar site, as well as our YouTube and GoToWebinar site as well. If we have time, it will be great to know your analysis of crude oil and natural gas as well. Ahmed, I haven't got natural gas here, but we'll have a look at oil, certainly. And Hilary, I haven't forgotten about doing the analysis of the markets as well, because Emma actually asked, I missed Emma out. Emma asked about the USA 30 and the US S&P 500, and Hilary, you're asking about the NAS, the Dow, and the S&P. So we'll have a look at those three now, those three stock markets. So they all had a big shakeout. I'm sure you're all aware. They had a big shakeout on Friday. So February, let me have a look at where's my indexes. So let's have a look at. Start with the most important, which is the S&P 500. It's the 5-minute chart. I don't know if it trades on the 5-minute chart, but you could do. Lots of people do. 4-hour chart, she asks. So let's take the 4-hour time frame. So what's this telling us? Well, what's that telling us, traders? What's that telling us? Is that in a downtrend or an uptrend? What's going on with the S&P 500? You tell me, guys. It's in a downtrend, isn't it? It just can't get any break, can it? This is the 50-day moving average. The golden line here is the 200-day or 200. Sorry, it's not the day; it's on the 4-hour time frame. The 200 moving average. So on a daily time frame, this would be a golden cross. It's negative. Death cross. Sorry, not a golden cross. The 50 has crossed from above to below the 200. That's negative. You see, it's flattened out since then, but this is moving lower. The big 4,000 time frame was breached. If I go to my other chart, my profile chart, with the S&P 500 on it, we'll come back to this one. You can see it, and Emma and old. So I go back to my S&P. This is my. You can see clearly here. The uptrend we had during January stalled significantly in February. We couldn't break. The key level for me was this 4175. 4175. For 11 days, we poked at it, poked at it, poked at it. We even poked as high as 4,200, but we just couldn't close above it. We couldn't actually close to it. So that was a big wait and see for me. Here, we got to the 16th. Big down day, big engulfing candle there on the 16th. See how that candle there, that big, we've rejected going high because we've got intraday wicks that we haven't been able to close over this 475. But equally, we didn't want to close over 4,100. So there were the two levels I was watching. I'm a trend follower, remember. The moving average had flattened out, but still sort of biased to the upside, but we just couldn't get any break. The big, a wake-up call was here on the 16th when we broke down. It was a Friday. We broke under the 4,100 level on that Friday, and that was enough to. I did enter, shorts there, although it hadn't triggered under my rule, which is breaking under the 50-day. Sorry, it wasn't a Friday; it was a Thursday, wasn't it? And Friday we entered short because it broke actually under the 21 EMA as well, added to that position, and then added again here on the 21st because another big down candle. Then we've moved down under the 50-day moving average, and then we've moved down and we tested the key 39.50 level. So the big move down in February has happened here on the daily time frame. Is it going to continue, or are we going to find some support? So this is your support, 39.50, Emma. If you go back to your 4-hour time frame, the one you're trading, it's still angling lower, but the 39.50 is the big support area. As you can see, there it is there on an end of day basis. We want to spike through it for a few hours here on the 24th here of a 4-hour trade, but it's still angling lower. It may be trying to find some support, but we need to break again, the trend, the moving averages have angled down quite nicely. Then we've sort of waved here. So we've moved down, up and down, and flattened out and down and up and down. So we're still biased lower, but it looks like the energy may be running out as we've run into the end of the month. We'll see where we go. But we need to break, firstly, as we came down breaking it, we need to break over the 21 EMA. So for a 4-hour trade, that's 3992 at the moment. Then there's the big psychological 4,000 level. And then the 50 period moving average for 4-hour traders sits at 4018. So they're the three levels to the upside. We want to break to see if this is going to start to move up. As you can see, we haven't been over this blue 50 period moving average line for a long time, not since the middle of February. And remember, that's when we broke down. So we're still biased to the downside. Okay, that's S&P 500. The Dow on the 4-hour time frame, very similar setup, obviously, but it's a bit more exaggerated. So here we are. You can see here on this one, the 20-hour moving average. Sorry, the 20 period moving average on the 4-hour is much further away than it was on the S&P. So there we are, 32,870 that needs to break. In fact, no, it's higher than what I'm talking about. 32,000. Yeah, 32,870, yes. And then the psychological 32,900. Then we've obviously got 33,000 beyond that. And then beyond that is the 50 period moving average at 33,150. So again, another one in a distinct downtrend. Yes, we've bounced for three or four candles, but those candles are very small. There's not much, not many buyers pushing that higher. The down candles are much bigger. The bodies of the down candles are much bigger, aren't they? Save that one there, but that was eaten out by that one there. So the bias, stock markets remain biased to the downside on those 4-hour charts. Okay. And Hillary was asking about the NAS as well, the NASDAQ. So let's have a look at the NASDAQ. I've got the NASDAQ here. I have. US 5, there it is. US. Let's just use that one instead. So this is the US. This is the futures for the Nasdaq. Again, this is the daily time frame. So again, another one that breached its 20-day moving average, but not on the 16th, but later on in the month. Nasdaq's been the biggest faller, biggest riser, and it was the 21st before it breached its 20-day moving average. And it's sort of consolidating, hasn't it? It's broken through, and it hasn't really wanted to go much lower in February. So our intraday low or the end of day low took us just under the key 12,000 level. So the big round psychological number 12,000 again coming into play for the Nasdaq 100. And that's proving support at the moment. So we're consolidating 1, 2, 3, 4, 5 days. We've held that support. Are we going to break back up? Can't make a decision. Are we going to go much lower? Again, can't make a decision. That's broken. We need to break back over the 20-day moving average, which sits at 12,200, and 12,000 is our support. So 12,000 is our support. 12,200 is the breakout potential. Wait and see, ladies and gentlemen. That's the markets, Hillary, on a higher time frame. Joseph's following us on LinkedIn. Very good, Joseph. I haven't got the LinkedIn link here, but I'm sure you can follow us on LinkedIn and all the other social media platforms as well. Right, where did we get to? We did yen pairs over on YouTube. There's no more questions on your euro. Daniel has left, but he's asking about the pound yen. Sorry, Daniel. Hopefully you can watch the recording. Pound yen. Where's my pound yen? Where's my pound yen? As we said earlier, it sort of remains at bid, but here intraday, oh, we did mention it, didn't we, earlier? Big move down. 164 was breached this morning, and 163 has been tested. So a big volatile move for our the guppy. It can move around very aggressively. Um, we trended higher here Friday, we trended higher Monday, we trended higher Tuesday, all on the back of the positive political stories coming out of the UK and a weaker yen. So we went as high as we couldn't quite get to 166 here yesterday. Or did we? In fact, we did breach 166. Forgive me, we did breach 166 yesterday. Let's put that in. So, make a note of that. So it's 166. So, no, it's there. When I come back to it, come back to this particular chart, so many different profiles. But there we go. We did breach. Oh, ran into it 160, but then turned around really quite aggressively. So that got a short from being long earlier in the day. We then turned a short, closing out the long the hour before. That turned short at 7 o'clock last night, went all the way down, closed out. Looked like it was going to go long, didn't work out. Re-entered short here as it's gone back under this morning at 9 o'clock, and then that's hasn't would have added there as well as it's made a new daily low over the last couple of hours if you wanted to play it that way around. But trailing stop loss down, we're now at 163. It's a key round psychological number. Dennis, is it going to hold there? Well, who knows? If that breaches, though, it's very quickly down to 162 as well, isn't it? This pair can be very volatile, so be careful. The spread's a bit wider than most of the other majors, but not that much. But certainly, there's lots and lots of pips on offer for the pound against the yen, pound against the Aussie, pound against the New Zealand as well. So be careful when trading that particular pairs. But that's pound yen for Daniel. There's nobody else asking over on GoToWebinar. So come on, guys, don't be shy. Oh, hang on a minute. There are Mark, sorry. Uh, Miles was asking about the video. We talked about that. How we have the time. It'll be great to know your analysis of crude oil and natural gas. Ahmed, I haven't got natural gas here, Ahmed, so I can't do that for you. But let's have a look at oil as well. Oil, a key commodity. Talked about an oil, the financial press. You need to follow what's going on with oil. The one we've got here is the US oil, so that's WTI, predominantly produced in the United States, not surprisingly. It's got a but a slightly less sulfur content than Brent. Brent is the on CFD brokers is called you see it as UK oil. And when people talk about you see in the press talking about the oil price, they tend to be talking about the Brent price rather than the WTI price. They're usually $2 or $3 per barrel different. But when people talk about the oil price, they're talking about Brent, and that's UK oil, not US oil. But anyway, uh, um, the American broadcasters, Bloomberg, CNN, CNBC, tend to talk about US oil. So we look at US oil rather than UK oil. Anyway, that's a minor point. I'm asking about what's the analysis. Well, it's trending. Sorry. Um, it's not really trending. It's sort of oscillating, isn't it? January, February. So a bit like the currency market, we went higher during January. We went as high as 81, $82, but could again see how the wicks here. We couldn't break 81.50. We couldn't get to 82. So $81 a barrel was our high on an end of day basis. In fact, we did actually go to 81.50, but and then January, but it couldn't hold it. It turned around, trended down quite nicely through the end of January into the beginning of February, but again, didn't want to go much lower than $72. So 72.20 was the intraday low for February. We rallied again, but the high was lower than the high in January. We couldn't get to $81 this time, and then we declined into the second half of February, but didn't get as low as the lows we'd had at the beginning of February. So got a bit of a wedge forming. Are we going to break out to the upside or the downside? Don't really know at the moment. It's just going sideways. And there's a trend following trade that's really messy. Nothing's really happening there. We've been up for the last 3 or 4 days. Um, into the end of the month. 77, 20, 78 couldn't be breached. So we're ticking up here, and really not a lot's happening as far as a trend following traders are concerned. So you're being chopped in and chopped out. Be careful with that if you're a trend follower. If you're trading the channels, the horizontal channels, the big psychological level betwixt where it's trading is the $75 level. Hasn't actually settled there at all. So it's struggling to get over $80. $80 all the way up here. But it doesn't want to break much below $74. So 74 is probably the floor, 75, 76. Well, we're getting to the trading zone. So as far as today is concerned, we've been up and then we've been down again. So we rallied into the month end over 77, 77.50. Tried it again this morning, 77.50. And it's given up in the last couple of hours with a big give up candle here. And I don't know whether that was a PMI data or whatever that came out. 11 o'clock, big down candle, and it's moving lower. $76 is calling today. We're at 76.25 at the moment. Below that, it takes us another whole dollar lower to 75 as well, because that's moving quite a volatile way. So, yeah, it's difficult on the call. The oil market. It's certainly not trending. Ahmed, my friend, no problem. Dollar yen, says Kevin. We did dollar yen earlier, Kevin, before you were here, but it certainly had um, a assuming, a quite a volatile session. So here, this is the hourly chart for dollar yen. From the big rally we had towards the end of February here, that took us from the 134 levels all the way to test 136. We sort of channel bound, supported by 136 this week. Monday, Tuesday, and here Wednesday, but we've breached that this morning. Again, another weaker dollar session, a weaker yen session. Sorry, a weaker dollar session has taken hold today. On the open of the European market, we broke under 136, and we continue to decline ever since. So that's trending lower. We broke the low of yesterday in the last hour or so, and we'll continue to move lower. And now we're not only punching in lows for the week, but we're starting to eradicate this rally we had there on Friday. So we're back, and 135 is the next sort of line in the sand that's sort of perhaps calling this pair as we trade at 134, 135.35. Obviously, it's all an intraday move and pending more PMI data, the key ISM PMI data out of the US. So that's trending lower. Don't fight the trend intraday today, but it can move around quite significantly. First support is breached, second support has been breached, and 135 is not out of the question today to the downside for dollar yen. Kevin and everybody else who wants more dollar pairs. So there we go. Let me have a quick swig of coffee here. Samuel says hi. Good afternoon, Samuel. Simpleton, good afternoon. Jasper, good afternoon. Amos, hello to you too. Mohammed, hello. How are you doing, sir? Sir, how's gold doing? Oh, sorry, sir. Hi, sir. Gold going up well. It went up drastically, radically yesterday, and again, it's followed through today, the first trading day of the month. So we've breached, and in fact, we got over, you know, 136. Sorry, 1835 or 1835.96. So 1836 at the moment as well. So that is trending higher from yesterday's move lower, or the weeks move lower. But if we look at the daily time frame, Mohammed, I know that you've got some big targets both upside and downside. The trend for February is clearly down. Huge candles here at the beginning of the month. We followed through for the rest of the month. and we've bounced a wee bit in the last couple of days. So we had a good day yesterday, having tested this low, and we've moved up. The big line for me is obviously the big round 1800 line, but the 200 day moving averages also sits at 1805. So I can't zoom that in anymore. Let's go down. You can see here. We can't see it on the. You can't see the 200 day, but the 200 day moving average sits around this 1805 level, which is where we spiked to here intraday yesterday. It's a 4 hour chart. You see it's moved up so far today. The 1 hour chart, as we saw earlier, moved up yesterday into the 200-hour resistance, broke it this morning, and continued to move higher from that break this morning. Significant break as well on a big candle, big break of that there at the 5 o'clock candle closing at 6 as a buy there at 1831, and we're still moving higher. Retraced there on the 12 o'clock candle. We're moving higher again now on this 1300 hours candle. So 135 um, uh, needs to hold and break on an end of hour basis if this continues to move to the upside. Trello, gold going up or down? Well, at the moment, Trello, again, depends on your time frame. The daily, it's still going down. It needs to break. If you're an end of day trader, it needs to break 1850, 1847, in fact, to go higher. As an hour trader, it's going up. As a 4 hour trader, it's going up. As a 30-minute trader, it's going up, stalling a wee bit, but it's still supported by that 20 moving average. So that broke higher. Where did it break? It broke higher there this morning at 3:30, and it's been long ever since. Might have got out there as it's plunged under the 9 period. You might have gone long again there or long again there. There were two long opportunities there for 30 minutes. It's retraced against you currently, but it's still relatively long, 30 minutes. It all depends on your time frame. Trilo, 15 minutes being nice and long, it reversed, but then it's gone long again. It looks like it may be reversing, but it's got support around that 20 period moving average as well, 15-minute. 5-minute traders, much more choppy. Long, short, currently long. Looks like it's rolling over. That's about to trigger short using this strategy. Yeah, 5 minutes, go. But yeah, all depends on your strategy. So the daily remains short. The 1 hour is long. The 4 hour is long. And the 15-minute is still long, looking to max roll up. And the 5 minute is about to go short. So it depends on your time frame, Triello. Uh, but the strategy, it doesn't really matter, does it? Whatever this asset is, whatever the time frame is, strategies, patterns, candles, they all look the same. The analysis can be applied to all the different time frames. That's why it's so useful. But that doesn't make you money. What makes you money is your mindset, your acceptance of losing trades. Bagging the pips when they're there, accepting that you lose, accepting there'll be a retrace, and having a good system, having a good edge, and having a good mindset. That's what makes a successful trader. It's all the soft stuff: patience, discipline. Not to getting too greedy, not getting too scared. They're the things that mark out successful traders. So I say carburetor. It does carburetor done. What a great handle. Hard to see candlestick face, orange biting nails. I don't know what that means. Carburetor. Hard to see candlestick face, orange biting nails. I don't know what that means, mate. Increased video quality. All right, okay. Increased video quality. Okay, okay. Hard to see. I don't know what that means. Guru. Oh, is it a black screen or the zooming in or I don't know what you mean. Mohammed Faisal, gold up. It is going up. Here on the 5 minute chart, it seems to be going up. It seems to be about to trigger short here. The 5 minute chart, 1 minute chart probably already has. There we go. 1 minute chart, he went short then, but then he went flat. Anyway, I would have added again there at 48, 6 minutes ago. And it's still short, but there you go. It's run to its 200-minute moving average there, so it's probably ran out of going short, maybe. But that's flat for 4 minutes. 5 minute. It didn't actually trigger. It didn't actually break under the 21 EMA there using that one, so it's still not short. Looks like it's going short now. Potentially, it's all about time frame, my friends. Who's that? Nobby says he likes the black parallels. All right, so you're the only one that responded to me, Nobby. It's a good job I left it on then, didn't I? There we go. Black background. And then online saying white. Okay, all right. So let's go to white because online guru's been here a while, and Nobby have been black since we started 50 minutes ago. So let's go to. Is it that one? Is that the white one? There we go. Uh, there's a white background for you um, online, and there's your. Let's see about the yen. There you go. This is the yen um, on the daily time frame. This is the green lines are Bollinger Bands, and the blue line is the 50-day moving average. The orange line again is the 200-day moving average, and the green line is the 20-day moving average. So there we've got a positive cross there as the 20 went over the 50 here at the 22nd. So, dollar still bid against the yen, although we've seen that intraday action in the opposite direction. So, Michael's asking about gold. We looked at gold lows, but let's look at it again on this chart. It won't look any different. Trending, this is the 15-minute. Let's go on the 1 hour. There's that move down yesterday where we went to the key 1805. Big rally yesterday. Took us to 1830. The blue line here is 1830. We've continued to move higher today. 1835 is the area we're struggling to break above. But as you can see, the moving averages are moving up. The midline, we're in the upper half of the Bollinger Bands from yesterday's breakup. The moving averages are all, in fact, they're not aligned. There's a 50 hour. There's a 200 hour is below the 20 hour. So the 20's crossed over the 50 back here yesterday and the 200 here just now. So that's relatively positive. What we've got though potentially forming is a bit of a squeeze on the Bollinger Band. Having had this leg up here, you can see that the top of the Bollinger Band has come back in and the bottom of the Bollinger Band is coming up. So if we've got a squeeze, we may break out of this or we may just consolidate around this level. Really needs to break above 1835, Michael, and anybody else today that's trading this, for this to continue to move higher. But at the moment, just sit tight. It looks okay. It's moving higher. Obviously, we had a shakeout here, which has been from 3 or 4 hours up. Shakeout here at what time was that? That was the 11 o'clock candle. We've got very spiky percentage arc. I know I've got some of these oscillators on here, but RSI is 65, still pushing higher. We just consolidate. So really, depending on the time frame, a clear break of 1835 might take this higher, but it's proving difficult at the moment for gold. At the moment. Conrad saying, will you cover the ISM manufacturing PMI on the US store that's taking place this afternoon? Conrad, yes, I talked about it earlier. I don't know if you were here earlier. If you go back to let's go back to my slide. So I go backwards. Conrad, answer your question. This is the big news this week, and as you can see, it's a PMI day. These are the high impact events from our calendar, Conrad. And so what we had this morning was a big rise for particularly manufacturing in China. It's a decade high rally from 1 month to another. It doesn't seem a lot, does it? 51 to 52.6, but it was very significant. At the services side, also much better than expected. It was expected to actually go back into contraction under 50. Anything under 50 is sectors in contraction. Anything over 50 sectors in expansion. So it was doing okay in January. It was expected to decline in February. It didn't happen. It was a big beat. It was better than January. So it's a very significant rise in services sector activity in China as well, bearing in mind Chinese data taken with a little bit of pinch of salt. Anyway, your question wasn't about that. Your question, Conrad, was about the US manufacturing. This is the key piece of data still left to come today. the PMI data. 48 is expected to rise from January's 47.4. Obviously, anything better than 48 will be good for the sentiment and the feeling in the US. That will probably add pressure to the dollar simply because it shows that the US uh, um, um, the economy is recovering. Therefore, it would suggest that the Fed will need to be higher for longer. So that should lift the dollar and put pressure on stocks. Uh, just because that's the logical thing to happen doesn't necessarily mean that is what is going to happen. If it's a big miss, the stocks might rally and the dollar may cool. But watch this space is what happens. So as far as the Nasdaq's concerned, Conrad, which is what you were asking about, the Nasdaq, as we said earlier, I'll find the Nasdaq on here. Nasdaq, yep. It's been relatively sort of sideways action, but the key support down here is that 11,900. This is the Nasdaq, not the future. No. So this is 11,911, which is where we actually got to here during the latter half of February. So really, the round number is around that 12,000 is key as well. So Monday we rallied, went sideways yesterday, weakness into close. Uh, that's been recovered today, but we haven't yet got back up. So we're back over 12,000. We're at 12,100. I'm not sure what that blue line is there, why that isn't there, 12,100. But here on the 1 hour time frame, you can see we've got a bit of a consolidation here. We've got the top of the Bollinger Band coming to meet the 200-hour moving average. So there's clearly resistance to the upside around about here. It's also yesterday's high is where the top of the Bollinger Band is here, and Monday's high was a few points higher, which is basically that is the 20. So this is a big resistance zone here. You can see it's yesterday's high, it's Monday's high, it's just above that, and we've got to get into that level there. We've turned lower before we got anywhere near that at the moment. Obviously, markets aren't open, but we're still positive. We're in the upper half of the Bollinger Band, but the Bollinger Bands are flat. There's not much direction. The volatility's increased a wee bit as the width has widened on the Bollinger Band. So we'd really want to push the top of the Bollinger Band if this is going to move to the higher and hold the key 12,000. We're at 12,100 at the moment, so we're fairly well above 12,000. Let me just put 12,000 in. Yeah, okay. 12. I want to. Okay. So we're fairly well above that 12,000 level today, and broken above that from the quick spike below it this morning. But we really need to break over, and we want to get back. Watched yesterday's high, Monday's high, and this is top of the band. So we've cooled a wee bit, but that's not surprising. We've been up for 8 consecutive hours there. We've cooled a wee bit. We're still 2.5 hours away from the actual cash open, so we're sort of consolidating 12,100 at the moment. So see what the US PMI suggests. As I say, if it's a beat, that could help the dollar and weigh on stocks. If it's a big miss, that might lift stocks, depending. Maybe it's manufacturing and weigh on the dollar. So there we go. That's my take on that. But remember, just because that's the logical move, Conrad, doesn't necessarily mean what that's going to happen. But watch that later. It's if you want to watch it, it's going to be around about here, isn't it? The what is it? It's the before it's that hour there is where half an hour after the market's open, 5 o'clock server times when that data comes out. What we want to be watching, say the MACD there, very flat. There's no real direction there. Although we've got this bigger volatility with these bigger candles here, it's wide in the Bollinger Bands. Or not a great deal of action there on that particular chart, to be honest. Sideways, nothing. Dollar index up. Nelson, hello. David, hello. David saying I need a mentor. Well, there's lots of mentors out there. David, you just got to find somebody you trust, find a system you trust, find a strategy you trust. But more importantly, David, understand yourself first. This is a mindset business. It's a mind game trading. It's not about charts. It's not about patterns. It's not about candlesticks. Although that's what I've been talking about for the last hour. It's not about fundamental analysis, technical analysis. It's really about your mindset. Have you got the mindset to deal with losing, deal with winning? Can you accept, setting a target and waiting for something to hit it, setting a target, setting a stop loss, and waiting for the market to tell you whether you're right or you're wrong. Can you deal with being wrong? Lots of people can't. I found that very, very difficult when I first started, but that's really what trading's all about, David. So keep in touch. We're here to help. Watch our videos, watch our webinars, watch our ebooks. But really, you got to look yourself in the mirror and find this. That's the key question you want to ask. But yes, there's lots of helpful people out there, lots of free stuff on YouTube and on Twitter in particular. Lots and lots of really good, helpful people on Twitter as well. So get yourself up there. Dap was asking about the dollar, yen, and the Nasdaq 100. Well, there's the Nasdaq. We just had a look at the Nasdaq. Wasn't really doing very much, was it? Dollar yen here has had a good break today. We're back over 106. It's a different chart than what we were looking at before. Who asked for the black chart? I hope you appreciate it. Okay, so I'll do a different line down. So 106 we breached this morning and we haven't looked back really. So it's up, 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 trending over the top half of the Bollinger Band, supported by the 50 hour here, broke 106, broke the 200 hour the following hour with big strong, with a big, big candle, took us beyond yesterday's high, which is always quite significant. Stalled a wee bit, retraced, but then another leg up, and then another leg up, and here we are at 160.70, 106.70. Where does that take us? Well, if we look to the left, we haven't been all the way up here since our green line there, 106.70 since here on the 21st, which we turned around quite quickly, didn't we? But we were in a downtrend then. So that's a key level. And beyond there is those two candles there is where I'm drawing my attention to. So it's 106.85 is the next key resistance level to the upside for the euro today. Because if we look there, you can see how it goes through this pivot area here we had on the 20th and the previous Friday when we rallied up. So the Monday, the 20th, was a key area through that 106.85 area. We couldn't hold it on the Tuesday, and then we descended Tuesday, Wednesday, Thursday, Friday, rallied Monday, rallied a bit, and declined a bit last day of the week yesterday, and then we've rallied again back up, breaking the 200 hour, which we hadn't done again for a long time. See, significant. Sorry, so it could be a potentially significant break here. Well, it is because the size of the candle and the fact we're over the 200-hour moving average. So we haven't been over that for a very long time, have we? So that's a significant break potentially today. There, see how the Bollinger Bands have widened as the size of the candles have increased. So big break followed through. So we're looking to break 106.85 and then perhaps get us back to 107. So big strong break today. Is it overbought? Well, the RSI here is saying it's overbought. We're into 73, so we might have already ran the course today, but that's the next levels to the upside you want to be looking at. 106.85 and 107 to the upside if we can break above this 106.70 level where we are at the moment, but it's looking relatively positive. As you can see here, we turn around quite quickly as well on our RSI as far as euro dollar is concerned, but we're sort of breaking. So the rally today may have already run its course. But Nasdaq, as I say, depot, not a lot going on. Rayon, nobody, you're all gone very quiet over on GoToWebinar. Uh, Nasdaq, we did Nasdaq. Didn't we? Rayon, good morning. I guess you're in the Caribbean if you're saying good morning. Gold is euro yen had a good day yesterday, and pound yen for today. Well, let's have a look. We've so this intraday stuff. I guess you're on that. So gold, where's gold gone? Rayon, hang on a second. Where are we? What was your first one? Euro yen's the first one I've got here. So Euro yen today, very strong day yesterday, over 145, 145. Where did we get to yesterday? I was watching this yesterday. 145.50, well, 145.46 or 145.50. Declined from there, but it had, it'd been up from the move down here. So Friday, Monday, and Tuesday we were higher for euro yen. Strong candle yesterday, but then shook out into close. So we closed down quite significantly. But we've recovered. You know, that was the range yesterday, and there we are. See the range from yesterday. That key fib level is where the Bollinger Band sits there. So 144.80 is the key level we want to get over to recover that shakeout of yesterday's big move. But it's still relatively big. So today, to get to the upside, Rayon, we need to break the sort of the Bollinger Band there, and that's 61.8 fib from yesterday at 144.80. Doesn't look like it's going to do that. So for 5 hours, we couldn't get to it. And we may be breaking down, but again, it may be too early to tell because the 50 has crossed over the 20 or the 20 has crossed down. So that's perhaps negative. A break of the 20-hour moving average, Rayon, would take us lower. If that does happen, you'd want to watch that low there, 143, well, 144. You see where those 5 hours were into close yesterday, 144. The intraday low yesterday took us to 143.86, and that is also coinciding with the bottom of the Bollinger Band. So they're the levels below that, and then below the bottom, if that breaks out the Bollinger Band, there's the 200-hour moving average, which takes to 143.63. So 143.63, 143.82, and then 143 itself if this breaks into the under half of the Bollinger Band. If this holds, we'd want to break back over the 50-hour moving average at 144.45, push a new day high at 144.80, take us out of the Bollinger Band around that 144.80 level, and then perhaps test yesterday's high, which took us to 145.45. So 145 key line in the sand to the upside for euro, yen, Rayon. As far as the guppy is concerned, the pound yen, how is pound yen gone? Not Fintan. I was up early and I haven't had any lunch yet, and it's 2:15. I haven't got pound yen on here. What else? Where's my yen? Pound yen is very much bid to the upside, Rayon. We've got it here on with the Heiken-Ashi candles, but you can see here, you were saying today, this is the daily. You see that it's definitely bid still. We've got a red candle today. So 1 hour candles. That's rolled over this morning from long to short. So it was long this morning. Nice. From a trending point of view, Heiken-Ashi candles make things very, very smooth. So we were long into here at 9 o'clock. We got as high as 64.50. We rejected that. We put in a red candle at 164.20, and it's been short ever since. So that's short. And here at the Heiken-Ashi candle, you see the size of the body of the candles. There's no wick to the north. That's a strong trend developing. So that at 163, big round number again. I'll put that in there. 163. I'm going to have to change the colour because it's changed the background yellow. 163. Yellow. So that's the level we need to break. But as you can see, it's a big round number. We've been down for 4 hours already, but the trend remains to the downside. 30-minute time frame, even more aggressive. 15-minute, just as aggressively, but still all red for all of that time down. But big support being found now at 163. That's a beautiful Heiken-Ashi charts, candles, very, very clear. And we trade at 160.09, 163.09 at the moment. The daily sort of rolling over negative. So that long position through January has closed out. Uh, Yet to make a decision on the end of day basis, but certainly for a 1 hour trader, we were long yesterday, then we were short, then we were long this morning, and then we're short now for pound yen. And finally, Rayon Gold. Let's go back. Profile, say gold. I'm just going to use different charges for my sanity. Excuse this. This is the Ichimoku yesterday. Or this is an end of day basis. You saw yesterday. It looked like we were breaking out of the cloud. It didn't happen. We did test that 1805 level. We've turned around very aggressively in the second half of yesterday. If I go to the 1 hour time frame, you see we turned around really aggressively from that 104 56 test, rallied to 1830, and we've rallied to 1835, and we're stuck there at the moment. But as you can see here, we're here on the 1 hour time frame, and with Ichimoku, we're above the cloud here significantly, and it's trended strongly yesterday afternoon and again strongly today. So, but we need to break 1835 to move this up. Next resistance here is round about there, 1838. I'll call it 1839 for the sake of a round number. Top of the cloud here from the 23rd. Then we go levels take us to 1843, another key level there from that cloud there, from that particular setup. Okay, so gold bid today, but you'd like to see a break above 1835, which has been struggling with for most of today. Support, well, initial support would sit around about there, 1834.15, and then 1823 and 1828.50 and 1823 on that Ichimoku setup for that particular chart, hourly time frame. Uh, um, um, Rayon, I'll answer your question. Mohammed, good afternoon. Victor, good afternoon. Mohammed's asking about, what's that? Where's Mohammed gone? Mohammed was asking about something different. Euro Swiss, nice one, Mohammed. Not many people ask about Euro Swiss. Some people say it doesn't move very much, but it doesn't matter what assets you trade, guys. They all, they follow the rules. They follow pattern formations. They move. They don't move. I don't know if I got Euro Swiss on my Euro. I have Euro Swiss. I should have Euro Swiss. Where's Euro Swiss? There we are, Euro Swiss. So this is bid. It's going euros going up against the weaker Swiss franc. Mohammed, I don't know what time frame you're trading it, Mohammed. The last question I had was from Conrad over on GoToWebinar. So I'm very quiet. So that's what I'm sticking with. Conrad, that's not a problem. Euro Swiss. I hope you've been trending this or following this, but this has been trending really nicely here from the 23rd. This consolidation down here, higher 20 periods support tested, and it's broken over 99.70. I think it was the last time we looked at the reason this is on here, Mohammed. I think it's the last time that 99.70 level. I think it's the last time we spoke about this, wasn't it? But it's been a big break, and it's not quite sure what it's doing next now. That's the 1 hour chart. The 4 hour chart remains very, very bid. The bit overstretched, but nicely um, rising signal line. RSI 75, a bit, poking into the overbought area. It doesn't happen that often, but it has. So it may be overstretched a wee bit, but the trend is still with you. Trail your stop loss up. Stop loss should be around. I'd have it around about there now to lock in some profits if you've been trading this up at 99.62. So two candles behind where we are at the moment. But obviously, there's still potential upside here. So where are we now? We're at 99.85. Last time we were up here, we went as high as we actually breached parity. Let me just put the parity level. Parity being 1 for 1. So let me just put that on there. We're not that shy of it, are we, object list? But quite often, it's such a round number, parity. Make it thick so we can see it on our chart. It gets it scares the market off. It scares the price off, so we don't actually get it. It looks like it's going to get there. It looks like it's inevitable. Sometimes it does, sometimes it doesn't. When it does breach it, it can't hold it, just like it did here back on the beginning of February. So it's a big, strong rally we've got here. We've been a smidge of it in the last hour. Sorry, not last hour, the last 4 hour candle. We got within a smidge of it, got as high as 99, 97.7, so within 3 pips of the parity level. Didn't happen. We closed here, but we closed above the 99.70 level, our key line here, and we've gone higher again since. So that's certainly bid. Mohammed, I don't know what time frame did you actually ask? Um, no. So that's bid on the 4 hour. It's certainly bid on the 1 hour. There's that parity level. Don't fight it. It's sort of stalling a wee bit, but still be long there from this strategy here. You would have gone. This would have last triggered along here yesterday morning, 9 o'clock candle. Retraced a wee bit. Could have got long again there. Then it's gone to new highs here, broken that key 99.70. That might have been your target intraday basis. Who knows that now you're trading it. But certainly bid to the upside. One parity needs to be uh, breached basically if it's going to continue higher. If we look at the daily time frame, though, it's been a very strong rally from this big flat base, which we like flat bases here during February. So we had a big support here around about 98.50 for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. We didn't want to go under 98.60, in fact, not 98.50, so 98.60. Again, big pivot area here for December, resistance area here for November, a resistance area for October, became support for early um, November, then became resistance for the rest of November. We pivoted through it for December. It became support. We rallied off it for January, and now February is now a sort of big 12-day support area. Rallied off there. End of day traders would have taken the long position there on the 24th, and they've been long for 1, 2, 3, 4 into our fourth day long on an end of day basis for Euro Swiss. They were long from 99.16 on the close of that candle on the 24th of February. Parity 1 is the next big line in the sand. If we a daily closing candle above 1 last occurred on the at the end of January, where we closed at on the 30th of January, when we closed at 1.0033, but then the final trading day of January shook that out really aggressively. So that is a big fat resistance 1.00, and any break above it hasn't been held. Like we couldn't hold it here in January, then and then again then, and we come back down. But it's a very significant level. And as you can see, last time we were up here, if we look to the left, back to 2022, took us to the summer, where we were above it for quite a significant period of time, but June, July. But then we've been under it ever since. This yellow line here, this parity line here. So we're having another go at it now as we get into March. So are we going to break out? Well, just sit tight at the moment, traders, because the trend has been up quite aggressively here. In fact, we've had a positive day for Euro Yen for what's that? That's six. Geez, that's more than 1, 2, 3, 6. Yeah, into our seventh consecutive day higher for Euro Yen. So it may be looking maybe due a pause, but don't assume it's going to pause just because it's gone up to 6 days. Parity is the key level, Mohammed. Does the ISM play a factor in the outcome for good this morning? Do you mean gold, Traventi? I think you mean gold, don't you? The ISM, I mean, a lot of them are already out. The Chinese ones, oh, do you mean, but maybe why that's added to the upside in gold. But don't read too much into because the news is X. This is going to happen. Y is going to happen. Things happen because things happen sometimes. if you're just trading the pure price action, you're not really interested in the news, what's caused it. You just know that something might kind of happen. You know, I can't give you any advice. I'm not allowed to give you advice, but if you're going to trade intraday, you've got to be aware of what the big news items are. And for the rest of the day, the big news item that's still to come is the manufacturing PMIs out of the US. The one at 5 o'clock, the ISM one, carries much more weight than the one 15 minutes early. But obviously, the one 15 minutes early will give some sort of indication potentially. I mean, it could be a shock. Neil Kashkari's got a speech as well. He's now a big hawk on the Fed. Can he get even more hawkish? Well, he could, but he probably won't. But who knows? So trade what you see, not what you think. Don't read too much into it. At the moment, Treventi, if I guess you mean gold, not good. I don't know. I mean, say at the moment, gold is tracking higher. It's stuck at 1835. It needs to break over 1835 to move to the upside. And just to answer the question, somebody's asking, what indicator is that? Who's that? Who's asking that? Who's asking that? This is Ichimoku. It's a whole system in itself. Who was asking? Someone was asking earlier about what. I can't see the question then. Anyway, as you can see here, it's not dwell too much on the Ichimoku setups here, but you can see the candles are moving higher. We had a big move higher. You can see that 1835 level. And it's literally, since we were last on this chart a few minutes ago, we've sort of tried to push higher. It's 1837.50 now. So we need to want to hold these candles over 1835. And then you can see here from this setup, next resistance is at 1838.90 level. Top of the flat where we have not much action, the flatness of the cloud there from the 23rd, and then the top of the cloud took us on the 22nd to 1842.99. So 1843 is that next key level to the upside. So it's trending higher. We've got a bit of support for gold here immediately at 1834. If we can continue to hold 1835, that's the next support. That 1835 breaks down, and then below that we got 1828.50, and below that 1823 for gold intraday. Okay, so that's where we are. Somebody asked about. Anyway, final two. Oh, it's Francis was asking what indicator was this. Francis, this I guess you're talking about this one. This is Ichimoku. Okay, it's a whole trading system, 5 or 6 different things on here. Uh, developed in Japan many years ago, and most of the Japanese traders, all the Japanese traders I know, trade with the Ichimoku, and many more do as well. So that's what this is. But yeah, it's a whole webinar and series of webinars to explain that what you're seeing here. It's like moving averages, but it isn't moving averages. It's trend following. It's predictive. It pushes stuff forward. It's the only system where you have a cloud out here ahead of the price action. It's only also where you've got lines, Ichimoku Sen, behind the price action. Certain days are key. 26 days is a key number. 12 days is a key number. Developed for commodity markets, developed centuries ago for end of day traders in Japan, and it's still very much trusted by certainly Japanese traders and many traders around the world. That's what this is. That's what you're looking at now, Francis. But don't get too overwhelmed by all the colours and the lines and the charts on the graph. Okay. And Pappy, we'll finish with Ahmed. That's not a problem. You take care, my friend. Thank you for your kind comments. Stay safe. We'll finish with the most popular of all assets across the minute amongst brokers. Again, probably against all brokers. Certainly, the most highly traded currency pair is the euro dollar. And we'll finish with let's finish with a white background. Euro dollar. intraday. What's it doing, Pappy? Well, it's sort of bid, isn't it? It's sort of had a big rally up to. Sorry, there we are. Um, it's had a big break of 106. There's 106.60. There's that big support area there. We've broken up. We were above yesterday's high. Yesterday's actually today's low was lower than yesterday's low, so but that was turned around very very quickly. 106.50 has been breached. We're at 106.70. 106.85 is the next key target, and we, as I've been talking, we got closer than that in the last. If I got the 15 minute chart, yeah, there we are. So since I was talking, we got quite close at 106.85 level. Let's just say with the hourly chart, but it's a bit stretched. The RSI is over into the overbought area at 74.50. We don't worry about that too much at the moment. You know, it could stay overbought for a while, but it may be looking to turn around. But we've burst out with the Bollinger Band. The Bollinger Bands are quite steep. But the 50-hour moving average down there at 106.16, 106.6, so it's over the key 106 level. The 20-hour as well, so big rally in the last few hours for euro. 106.85 is the next target, and then the big round 107. And we haven't actually been over 107. Let me go to the 4 hour. We haven't been over 107 since back on the 16th of February. So that's a key line in the sand. So 106.85, then 107 to the upside today for euro. I say it has got a bit stretched, but support is there 106.22, and then a nice congestion support there at 106.02. So 106 itself, basically. All that. Okay, right. I'm going to wrap this up, guys. There's no more questions either on YouTube, Facebook, or on our GoToWebinar site. I'll just finish with a few um, slides. Thank you for your time this afternoon. Next tomorrow, we've got position trading with Otto. Next Tuesday, I'm going to be just concentrating on the market open. So the cash market open. So when the stock market's open, how people trade that, and many people, many successful traders trade just a few minutes, an hour or so of the London Open. The DAX is another favourite intraday trader, and the US Open, of course, as well, trading the Dow, the Nasdaq, and the S&P 500. So, how do we trade the Open? Join me next Tuesday for more on that. Live analysis every Wednesday. So next Wednesday is with Andrea on the 8th. Then we've got some risk management with Otto. In March, Andrea's going to run through two of our key tools, the Auto Chartist tool and the Premium Trader Tools package as well. So first one on that is the Auto Chartist. Interest rates with Otto on the 16th. We'll look at three oscillators on the 21st. The money flow index, the DeMarca, which I haven't looked at for a while, and one of my favourite of all, the ATR. Do you need them all? Are they showing the same thing? Have a look, see how good they are, how bad they are, see if they work for you, because that's what it's all about, finding something that works for you. Oscillators are, by their very nature, better when markets are going sideways than trending, but they can be applied to trending more as well. But more on that on the 21st. Back testing on the 23rd, Premium Trader Tools Part 1 on the 28th, Part 2 on the 30th, and live analysis every Wednesday, as I said. So if you've got any requests for topics for our webinars, please let us know. Gambler, thank you. It's not a problem. And we'll add them to our April analysis for you guys. Remember, that's what this is all about. Joseph, thanks for this webinar. It's very helpful as new traders to know what it's about. Mindset, accept to lose and accept to win. Right, it's most simple to know. Absolutely, Joseph. If you get that right, my friend, you will be able to move forward. It's not about, I'm saying we've looked at charts all day, haven't we? That is the most fundamental thing. Watch my risk management webinar, the one called How to Improve Your Trading Mindset. If you're new, if you're completely new to HFM, Joseph, and new to our webinars, I talk about that a lot. It really is absolutely fundamental. It is a mindset business. And just on that, let me just finish the slides off. I'm a big collector of trading books. People should read more than talk more, in my humble opinion. These are my three favourite trading books of all time. This one here, this Reminiscence of a Stock Market Operator, is now 100 years old, and it's still as relevant today as when it was first written. Trading in the Zone is 25 years old. Um, yeah, 2000 year old. Yeah, to need 25 years old. Its original book was 35 years old. This is a mindset. This is trading, all about trading psychology and understanding yourself. Mark Douglas, Trading in the Zone. Absolutely can't put it down, Joseph. It really is a mindset thing. And if you want to read about and find out about how successful traders do it and what they've got, any of the Market Wizards books by Jack Schwager. Those books I've had for years. I'd recommend them to anybody and everybody. My favourite book from last year was this one, though, Best Loser Wins. It's been written by a guy called Tom Hugard, who did my job for 10 or 12 years, not at HFM, but at London based brokers. He now trades his own account and has done for 10 or so years now. He's a not high risk, but he's a high stakes trader and fascinating, really quick and easy book to read. Again, my favourite book, trading book of 2022, Tom Hugard's Best Loser Wins: Why Normal Thinking Never Wins in the Trading Game. Why you want to be part of the 10% and not the 90% that lose. Anyway, fascinating stuff. And a lot of what I've talked about for many years as well, Tom's regurgitated it all and put it down in a book. And good luck to him. So there we go. Take care. Thanks for your time, everybody. Any final questions before we go, or any final requests? Remember, for topics for webinars or charts to have a look at. Any final requests? So I'm going to wrap up now and go and get some lunch. Best way to get hold of me is webinars at hfm.com. If you want to email me, follow me on HF_analysis on Twitter. Say lots and lots of really helpful people out on Twitter, guys. And Facebook is Stuart Cowell. Where can you get those books? Says Joseph. Any good bookshop, Amazon. You can get. Some of them are out of print because the authors have died. So you might even be able to download a free PDF copy of it. It's just that the PDF copies are sometimes have letters missing, words missing, and you don't know what the site you're downloading it from. You can't trust. But you can get this for about $12. I think this is the Trading in the Zone is $25. And Market Wizards you can probably get for about $20 as well. If you're serious about trading, invest in yourself. So $20, $30 in some books. It's all right buying the books. You've got to read them as well and put them to action. That's the beauty of Trading in the Zone. There's a 30-question quiz at the bit. It's not a quiz, it's just a question. 30 questions at the beginning of the book. And then it's also at the end of the book. So and unfortunately, Aaron, this is what drives this market. Unfortunately, too many people just want signals. Aaron says, "Drop signals, please." Learn to do this yourself, Aaron. It's a much better investment in yourself and your future than copying and following somebody else, because they disappear inevitably as eggs are eggs. They will not still be around in 2 or 3 years' time, let alone 2 or 3 months' time normally, let alone 2 or 3 years' time. Signals are, do you know the background of it? Do you know their history? It's easy to follow a signal, but it's also easy, very, very easy to lose lots of money in this business as well. So I'm going to leave you with, my books. No more questions. Right, I'm going to go. Take care, everybody. Stay safe, and we'll see you all again tomorrow. All the best, everyone. Bye-bye.